morning, everyone. Welcome to the Officers Adda 24/7. My name is Niharika Valia, and I am with you with the area of AFB. Please let me know if I'm audible as well as visible. Okay. So let's start with the class today. We'll be talking about a few questions on the various concepts of accounting as well as finance. Okay. If you haven't reviewed our app yet, then you can get all the details regarding our classes, regarding JAIIB as well as CAIIB classes on our app, and it becomes easier to watch the videos because again it becomes handy for you. And on the app, you'll find all the details regarding ebooks, our classes, even the recorded videos can be opened up, so it becomes a little easier to operate, right? So if you haven't downloaded it, kindly go ahead and check it out on the Play Store. If you haven't subscribed to our channel Officers Adda yet, then kindly go ahead and check it out as well. If you get it, you subscribe it beforehand, that helps you because once you press the bell icon, you'll get to know whenever we are coming for the classes, as well as regarding all the important updates regarding JIB and CIB examinations. Okay. Our new batches have just started. The batches would include regarding, there are two batches that have started. Number one is for the JIB English medium batch as well as the bilingual batch. Both the batches have just started. So if you haven't reviewed our batches and you are preparing for JIB, then this is the last selection batch for this particular year. So this particular year, this would be the last live batch, so you can look forward to for the selection batch. There would be more batches which would include the test series and the batches relating to the case studies and all. They would be there, but for the selection batch where we're going to teach the entire area, this would be the last one, so you can look forward to it. The classes are going on live. You'll also get ebooks for all these topics. Along with that, you get all the recorded classes, all the classes that are live. You'll also get the recording of the same for your better studies. Then along with this, what you can do is you can also interact during the live classes with the faculty whenever you feel there's a trouble that you would like to ask. Then there is test series, so all these things would be available in the features of our batches. So you can look forward to it. The batches have the timing would be 7 a.m. to 9 p.m. A few batches would be in the morning, a few batches would be in the evening, depending upon the timing, right? So you can check out. There is a specific planner which is available in our app or on our website. You'll find, as soon as you'll open this particular course, you'll find all the details of these things, and you can check out the planner where you can see which classes has been aligned where, right? So this is it for all the details regarding our batches that are going on. We are just about to start with our 3000 plus MCQ plus PYQ, 600 plus case studies. So that means we are coming up with a batch where you would be covering all these details. This batch is about to start from October 3rd, 2022. So do not lose this opportunity if you are preparing and looking forward to the case studies and PYQs. Right? Okay. Moving on. At present, our book selection series sale is going on. If you haven't reviewed our book selection series sale yet, there are many ebooks which are available for the JIB and CIB examination. This sale is for a limited period, so do not lose this opportunity. You'll get at least 22% off on this as well as on the shipping. So a good opportunity for anybody wants to study from the books directly, right? So the ebooks would be available to you at 22%. So this is not for ebooks but actual books. The physical books would be available for you, and there is free shipping from our side as well. All you need to do is you can use the code Y541 and get the discount. Okay. Now let's move on and deal with a few questions. The first question is the other name for straight bonds is. The other name for straight bonds is. What are bonds exactly? Bonds are basically the loans which are taken up by the company. That means these are debt instruments, right? This is a module A based question. Is it a portable debenture? Is it called a plain vanilla bond? Is it called zero coupon bonds or commodity linked bonds? Any bonds which is linked with any commodity, that would be called commodity linked bonds. Zero coupon bonds are issued at a discount, at a very good discount, I would say, and redeemed at par. Then portable debentures are linked with call and put options there. And the last one is plain vanilla bonds. The plain vanilla bonds are zero coupon bonds. That's correct, Mr. Alkumar sir. Okay. Moving on. Oh, the answer is visible though. So still, let's do this question. Let me make it a little easier for you. Okay. Now the question says if a bond is having a face value of rupees 100, the coupon rate is 11, the maturity after 3 years, the yield is 13 and the value of the bond would be 95.27, 85.27, 90.27 and 92.27. For this, all you need to do is you need to take the interest. The interest would be 11 rupees, and then you have to use the PV factor. The present value factors in terms of that would be used as 13% for 3 years. Then after this period of time, all you need to do is you need to get the face value back. But the face value will be back on the third year. What you need to do is on your calculator you need to type 1 divided by 1.13, that is 1 plus your rate, that is 13%. First of all divide it, whatever amount would come up, that is for the first year. Then press on equal to again, that would be for the second year. Press on equal to on again, that would be for the third year. These three has to be added up. Not all calculators have this option, so make sure your calculator has it because all the PV factors requires it. This is the calculation you need to do on your calculator. Just write it as per the way I have stated. 1 divided by 1.13. This, then press on equal to. Then you'll get the first year's PV factor. Then again press on equal to. That would be the second year's PV factor. Then again press equal to. That would be the third year's PV factor. Once you know all the three PV factors, add it up. That would be used here, and whatever the PV factor is for the third year will be used here. So your answer will come out to be 95.27. It's not C, it's actually A. Right? So this is how you're going to do it. It's going to be 11 into 2.361. That means this is the total of all these three, while 0.693 is only for the third year. Bond valuation requires a little practice because this is not an easy topic to look forward to. That's what I can say. Yes, so that's correct. Now, moving on to the next question. The purpose behind, opening the share capital suspense account would be. What is the reason that we'll open a share capital suspense account? Will it be trial balance does not tally, share forfeited reissued, and application money received pending allotment at the end of the year? I'm sorry. How to calculate it? Just note it down. Let me tell you, I'm writing the entire things that you need to do on your calculator. Write 1 divided by 1.13. Press 1, then press divide, then press 1 divide 1.13. As soon as you divide 1 divided by 1.13, you will get the amount as 0.884. That would be for the first year. In your calculator, you don't have to press the entire thing again and again and again. That is the beauty of this particular thing. Since we have to divide 1.13 3 times, so we don't have to do it again and again. We just have to click on equal to 3 times. It would be 1 divided by 1.13. As soon as you press it for the first time, you will get 8.884. Then press equal to again. Do not press any other button. Just press equal to again. You will get it as 783. Then for this third one, again press only equal to. You will get 0.693. So this is the way you need to solve it. And then add it up. Bond valuation requires time. Right? Okay. Here, when we talk about the purpose behind opening the share suspense account, that is D. When the application money is just received before the year end and we cannot allot the shares to the people, so we'll keep it there. That's correct, sir. Moving on. Treatment of cash book of cash introduced by the proprietor shall be. What would be the treatment of the cash introduced by the proprietor? If he is introducing cash into the cash book, the receipts are shown on the debit side and the drawings are shown on the credit side. That means whatever money is withdrawn from the organization, that means these are payments and these are receipts. How are we going to note it? Debit or credit? If there's a treatment of cash book, like when we talk about the cash introduced in the organization, it would be on the debit side. That's correct, sir. Moving on. The journal entry when we introduce cash into the organization is cash to capital. Okay. Oh, the answer is visible. Go ahead. Now the answer is hidden. So you can look forward to the question. Okay. The cost of stationery is recorded as an expense, not as an asset. When we are spending money on the stationery, maybe I would have got pens which are worth rupees 1000, maybe. If I'm spending money on the Pierre Cardin pens or the signature pens, there are certain pens that would cost around 7000, 8000. Why aren't we recording it as an asset? The basic reason would be conservatism, business entity concept, materiality, or matching concept. The reason that even if the stationery is costly and it's different, even then, we still record it as an expense, not as an asset. The reason is materiality concept. Isn't it that material? My business doesn't run on the stationery. It runs because of the goods that we purchase and then goods that we sell. That's why. The principle states that the accounting data should be definite, verifiable, and it should be free from personal bias. Which particular accounting standard tells you about this? Materiality principle, cost principle, then calculation principle of objectivity, or full disclosure principle. The principle states that the accounting data should be definite, verifiable, and free. When we talk about this, the answer would be the principle of objectivity. That means if I ask you that you have spent 10,000 on the petrol expenses, you'll say yes. I said, where's the proof? You showed me the proof, whatever there are, from the Paytm or maybe the GPay, whatever method that you have used. You will take out your bank statement and show those things, the payments to me. So this is verifiability. Whether if you state something in terms of the organization and the statement can be proved by you, that would be considered as a principle of objectivity. Next question. If the goods purchased for rupees 20,000 are sold for 25,000 on credit, under the accounting equation, what would be its effect? If there is any good that we purchased for 20,000, we have sold it for 25k. As per the accounting equation, which says that capital plus liabilities is equal to assets. Okay, what would be the answer here? The answer here would be, when we look forward to it, there it is. When we talk about it, the assets were of rupees 20,000. The goods that we had, that was in stock. Now it is sold on credit. That means the entire stock is gone while we have got a debtor worth rupees 25,000. The asset side has definitely gone through a change. We have a debtor, we have a stock. The stock which is nullified, but the added debtor is of rupees 25,000. That's because of the profit that we have made. If there is a profit, the profit is always adjusted in the capital. So basically it would be added here. So basically what will happen here is capital added by 5,000, debtors would be added by 25,000, and stock would be deducted by 20,000. So most probably B would be the answer. Treatment for the accounting equation. You have to be very clear what you are dealing with. That's what I can say. This is how it can look. Capital is added by 5,000. Debtors we are losing. Debtors we are gaining, but we are losing what? We are losing stock. The difference is because of the profit, and the profit is to be adjusted in the capital. That's the answer. Looking forward towards the next question. If a concern proposes to discontinue its business from March 2021 and decides to dispose of all its assets within a period of 6 months, the balance sheet as on 31st March 2005 should indicate the assets at their net realizable value, or the cost less depreciation, historical cost, or the cost price, or the market value, whichever is lower. When we talk about this area, that is when we the organization is going to discontinue in any case. Now there's a discontinuity, then there is no rush that we write down everything in the on the basis of historical cost. It's time, if the organization is dying, let's note everything at the price that we'll receive for that particular asset. So the answer would be net realizable value. This is where the going concern concept ends, and when it ends, we're going to note down things at the amount that we will actually receive for those things. Moving on, to know the return on investments by capital employed, we mean, when we are trying to find the return on investments, the capital employed would mean net fixed assets, current assets minus current liabilities, gross block, fixed assets plus current assets minus current liabilities. what would be the meaning of capital employed? The meaning of capital employed would be D, fixed assets plus current assets minus current liabilities. The next question, on the basis of the following, the liquid ratio of the company would be, if they have given that the current ratio is 5:3, that means if the current ratio is 5/3, you have got the current liabilities and you have also been given the inventory. Which part is missing? The current assets is missing. So first of all, you will have to calculate the current assets. For that, what you need to do is you can take up the liabilities here and the assets which are unknown to you. So it's going to be 5 into 75,000 divided by 3. That would be your current assets. Once you calculate the current assets, how do we reach out to the liquid assets or the quick assets? The rule is that whatever current assets you have, you move on towards liquid assets by deducting two things. One is stock, the second thing is inventories. Second thing is prepaid expenses. All the current assets are taken towards the for the liquid ratio. They are considered except stock and prepaid expenses. These two are not included. So the answer here would be 75,000 multiplied by 5 divided by 3. That gives you 1,25,000 would be your current assets. The current assets are of 1,25,000. All you need to do is deduct those 25,000 and you will get the liquid assets of rupees 1 lakh. Once you get the liquid assets, use this figure to look forward towards the liquid ratio. The liquid ratio can be calculated using the formula, that is liquid assets or quick assets upon the current liabilities. So it would be 1 lakh divided by 75,000. Basically what happens is, among the liquidity ratios there are 3 ratios that we are reading. More or less just 2 there. One is current assets upon current liabilities. The second one is quick assets upon current liabilities. When we look forward to both of these ratios, once you want to reach from current assets to quick assets, how do we reach there? We reach there by reducing the current assets from the term inventory, and also one is inventory, the other one is prepaid expenses. So that's it. I think we are running out of time today, so we'll be doing all the questions later on. And if you are looking forward to the JAIIB sessions for this particular year, then kindly do not delay. It is really important that you look forward to the class in a proper way ultimately. So what you can do is you can check out our website. Let me show you the website so that you can look forward to it. Right, so this is the website. You can look forward to our website for the further details. All you need to do is you have to go on the JAIIB and CAIIB examination area. There you'll find all the things, that is JAIIB bilingual as well as JAIIB English, and here is the area for the Mahapack. Under Mahapack you'll get everything that is regarding the JAIIB CAIIB Mahapack, and only the JAIIB Mahapack. Along with this there's a CAIIB Mahapack as well. You can purchase the JAIIB Mahapack. The Mahapack will have 6 months of validity, and you will get all the details regarding PPB, AFB and LRB, and that too you'll get more than 5+ batches. Plus you'll also get 600+ the case studies. Along with that, numerical and revision batches would be visible to you. All the crash courses would be there for you, and there would be focus and numerical batches that are going on. Those would be opened up for you, and you will get more than 61 ebooks. So do not lose this opportunity of getting all these things. And if you're looking forward to it, all you need to do is just click on the area of buy now and use the code Y541. As soon as you'll apply the code Y541, you will get a discount, and this would cost you 6,899.77. So this is an opportunity where you can look forward to the JAIIB examination in such a way you've got everything under one roof, one particular area, n number of batches, n number of case studies. You have got everything that you might be looking forward towards JAIIB examination, because yes, this is the last attempt before all those gradual changes they are bringing. So it's now or never, right? Okay. So thank you so much for being there. We'll be doing the remaining questions in the upcoming class. Thank you.